Hey guys, what's going on? Ty here, Bench Clear Media. Tonight we're going to tackle something that everybody gets excited about, usually at the beginning of the year, and that is taxes. And I thought, you know what? Let's go ahead and compile a list of the top questions that we get emailed, and Frank gets emailed all the time. And let's just nail the top 6 questions, top 7 questions out in a very digestible format. So that's what we're going to do tonight. We're going to answer the top 7 tax questions for you related to sports cards or your hobby in 2022. And there's only one man to have on to answer those questions, and that's Frank. Frank, how you doing?
Hey now.
How was your Final Jeopardy?
I love Final Jeopardy. I don't want to give any spoilers, but it was a historic episode tonight.
Somebody won, huh?
Somebody did win, yes.
Yeah, Frank and I were texting before, and he said, "Hang on, I'm watching Final Jeopardy." And I said, "What are you, 80 years old?" And his response was, "Ty, only the smart people watch Final Jeopardy."
Which is true.
Unbelievable.
But I'm sure that's not what your viewers want to hear tonight.
Nope. They're here to talk about taxes. And you and I have been going back and forth. This is your little baby. We've been going back and forth on the questions that you get hit up a lot with and questions that we kind of get hit because of videos that we've done. So we've boiled it down to our top 7 questions. But let's start with this, Frank. Should people be fearful? Should they be worried when they see a 1099? Should they throw it in the trash and kind of just let it go? Or is it something they need to take serious? Let's start with that.
Well, be fearful? No. I mean, almost every American, especially working, is going to get a 1099 or a W-2. That being said, don't ignore them. What you want to do is all the information you get from the government or from your employers or sellers, 1099s, and everything like that, you want to compile. And when you sit down to do your taxes, which I don't recommend starting before February 15th, you want to gather all that information together and either give it to your CPA, your tax preparer, or if you're going to do QuickBooks, you're going to need that information handy.
Got it. And you think waiting till February 15th is good because you need everything to come in? Is that the logic there?
Well, I'll tell you why I say February 15th. The government requires all employers and all financial institutions to issue 1099s by February 1st generally. But I actually got an email today from it's called Webull, which is like a investment trading app. And they said, listen, we're running behind. Because of that, we're not going to get you everything until February 15th. So, and they're a fairly well-known app. So based on that, I would say this year, and just how slow everything's moving, I would wait till February 15th, even though you could technically file today if you wanted to.
Got it. Okay, that makes sense. All right, so don't fear the 1099. It's something
Absolutely
you need to take care of. But we'll talk through kind of what the process is and where you put that in your taxes here in a second. Let's start with the question we get hit up with all the time, and it's surprising that we get this question. The question is, do I pay taxes on revenue or profit? And the difference between the two is total received money would be revenue. Profit would be what you actually made off of those sales after you subtract your expenses.
You don't even need me, Ty. Look at that. We're hiring, Ty, if you come to Michigan. Yes, that is exactly correct.
You would pay me more than I make on these videos, I promise.
You are going to pay taxes on your profit, not your revenue, because there's a good chance that your expenses may be higher than your revenue, which would trigger a loss, which could trigger a refund to you when you file your taxes.
There you go. So when you get that 1099, you see that initial number, it's sticker shock at first because you're thinking, oh my gosh, I got to pay X% on this number. In all reality, that is your revenue.
Correct. That is your starting point, not your ending point.
Got it.
And the 1099s added together.
Perfect. Okay. Another question that we get all the time is, at what point does what I'm doing in the hobby become a business? Sports cards or whatever hobby you're in, when should it become a business? When do you think you should consider it a business?
And this honestly is a tricky question. There's no black or white. I like to say it's very gray as to what point you are considered a business. A couple of things I would consider. Number one is the IRS on its website lists some criteria that they consider what is considered a business. But again, I say this every single year when this topic comes around. If you're doing this, number one, if you're generating $20,000, and we'll get to this, and that's a significant chunk of change for you, it's probably a business. Now, I know a lot of people last year I've talked to had a great year in 2020. Then 2021 did not go as planned. And they say, you know what? I'm getting out. I don't want to do this anymore. Not a business anymore. If you don't plan on continuing this and for this to be part of your, let's say, future for the next 3 years, I mean, granted, something could happen in 2022, 23 that would cause you to cease business. But if right now you don't, or you do plan on carrying this through, definitely for sure, it's most likely a business. Whereas you say, listen, last year was bad, I'm getting out. It then becomes probably a hobby.
Got it. So for you, when you're coaching your clients, it's more of a commitment level that you're looking for versus
That's
anything
one
on
of
the
the
revenue
major
side.
factors. Again, it's also how many transactions you have as well is a big impetus on this.
What are the thresholds there? What kind of flags you when you see?
Again, the thresholds are, again, are you doing 1 or 2 of these a year? You're selling, even if you're selling a couple major cards for 5 figures, if you're only selling 2 or 3 of these a year, I would argue it's still a hobby. It's not a business. You're not committing a lot of time necessarily to this quote unquote business. It's more something you're doing for fun that it just happened to be generating some side change that you can use. And another thing you want to consider also is when you're selling whatever you're selling, you're taking that money with all intentions of reinvesting that into the same hobby. Well, I don't want to say hobby, into the same business that you're currently doing. You're not saying, okay, I'm going to sell all this over 5 years and I'm going to take whatever money I get and just keep it and put it in my pocket. That is not a business. That is for sure a hobby.
There you go. That's a very clear distinction. Your intent with the money. What are you planning on doing with it? That's good clarification. When someone says, hey, I do want to start a business, what are my clear advantages I get when I do that? What's your answer to that?
I mean, when you decide you want to start a business, there's a couple of good things. The IRS, like your first year of starting a business, they say, okay, we're going to give you an extra $5,000 in deductible expenses towards this business. But the real key is when you start a business, and you don't have to have profits the first year or even revenues necessarily. You get to open up a world of deductions that you are not allowed to take if you were to treat this just as a hobby. And I mean, that includes travel, that includes meals, that includes almost any expense you incur not directly related to selling your product, whether it be sports cards, autographs, if you're breaking to buy inventory, anything like that.
It's almost like we planned this out because it's a perfect segue into the third most asked question. And that is, how much flexibility do I get with my expenses? That's a question I ask myself, right? What are the little things that I'm missing? What are the things that I can actually claim as an expense, from low hanging stuff like card expenses, supplies, and shipping, to the missed things that I always miss, like domain hosting cost, mileage, to depreciation. How do you coach people on the amount of flexibility they have with expenses?
I mean, we're going to jump a little bit ahead, but again, when it comes with expenses, it depends if you're treating this as a hobby versus a business. So regardless if it's a hobby or a business, the expenses for sure you can take in either case is any direct expense with selling that piece of memorabilia or that card. That includes grading it, listing it on eBay if eBay takes their fees. Because again, if you sell something on eBay for $100 and eBay takes their, let's say, 10% to make it easy, it's $10 off the top, you're still going to get a 1099 for $100. You're not going to get a 1099 for $90. And we're putting, again, shipping aside and all that as well. It's the gross amount of money you receive is what it's going to be. So you eBay fees. Again, if you have to drive to the post office, then again, that mileage can be deductible if you don't have a company car, which we'll get into maybe later. So again, we talked about grading. I'm just trying to think off the top of my head. So you just think anything that it takes directly that you can allocate to that card, you can deduct on the Schedule C, or which is a business, or the Schedule D, which is as a hobby. Now, additional expenses on a Schedule C that if you're running a business include anything indirectly to selling that card, setting up at trade shows, again, meeting with clients, setting up a web page is a common one I'm seeing a lot now as well also.
Mm,
So, I mean, I don't want to say the sky's the limit. You shouldn't get too greedy. But at the end of the day, I want to say in almost any scenario, you can almost make something deductible
yeah, that makes
as an
sense.
expense.
Perfect. Let's clarify something you just said there. Schedule C, you said for your business, Schedule D for your hobby. Help folks understand what those two different schedules are. Because I think people are probably thinking, okay, these expenses sound great. Where do I put them? How do I actually use them?
Yeah, and it's tough. So what's going to happen is when you go to your CPA or you prepare it on QuickBooks, we'll start with Schedule D first because that's a little bit easier. They're going to have, again, I'm subbing this up, but
Yep.
basically they're going to have two lines. They're going to ask you, okay, how much did you get for this item that you sold, which should match your 1099 right then and there. Then they're going to ask you, okay, what is your basis? And the basis basically means what are all the direct costs you put into that item in order to get it sold? The actual cost of the purchase, the cost of the grading, the eBay fees. And you're going to take those two numbers, subtract them out, and that's what you're going to have to pay an income on. Now, that's the Schedule D, and you're pretty much done. Again, there's a little more nuances. I don't want to get too much into the weeds. Let's move on to the Schedule C. Same thing. You got your 1099. That's your revenue. You're going to have your direct expenses, which include what we just talked about, which is going to go into the cost of goods sold, which I know we're going to get into in a minute. Then again, below that, they're going to give you an option for additional expenses, office supplies, home office deduction. There's even a column for other, and the other people like to have fun with because the IRS Schedule C only has a certain amount of lines. So they give you an option to list other items above and beyond. You need to work with a CPA, someone who really knows what is allowed and what's disallowed. Because even though you put other for 10,000, there's going to be a separate schedule in the back where they're going to say, okay, we want a breakdown of that $10,000.
Got it. That makes sense. I'm going to bring this up. We don't have to get too far into this, but when it comes to depreciation, you think about a car that maybe you drive 90% of the time for your deliveries, or a computer that you bought for all of your card stuff. How does that work?
Okay, so any fixed asset, we like to call it in the term, is like a computer, anything that's tangible that you can touch, that you use for running a business, that you use to run a business, that has a material value. So not like a penny sleeve, obviously. We're talking a computer. You can make an argument the cost for setting up a website. If you use a car strictly for your business or mostly for your business, those are assets of the business. And what the IRS lets you do is you can say, okay, let's say you paid $5,000 for your computer. You can say every year you're going to write off $1,000 over 5 years. So instead of taking that expense all in year one when you buy that computer or buy that card, you can smooth it out. Now, what the IRS lets you do, and I hear this term thrown around also, it's called a Section 179 expense. And basically what that is, again, let's go back to our $5,000 computer. What the IRS says, if you're running a profit at the end of the year, ignoring your fixed assets, you can accelerate that depreciation. So if your profit is $2,500, you can take up to 1/2 of your assets that you haven't depreciated. Hope I haven't lost anybody yet. And you can take that against your net gain. So instead of having a $2,500 profit and a $5,000 car on your books, you're going to have a $2,500 value of car on the books, and your net profit goes from $2,500 gain to zero. And the remaining $2,500 value of that car, you're going to still depreciate over those 5 years.
Got it. That is
now you say got it. Again, we're getting a little in the weeds now.
For sure.
So again, I'm happy to answer questions later on if people don't understand. But go ahead.
No, that's perfect. We'll get to how to contact you at the end because I know people are going to have questions on that. So good stuff. Okay. Well, let's go to the next question then. Should I be focusing more on COGS, cost of goods sold, or year-end inventory? And I think to help set the stage, let me show the simple cost of goods sold formula.
I love it. So beginning inventory,
that?
one of the common questions I get a lot. I had a lot of inventory in 2020, and in 2021, I decided to start my business with the inventory I bought from 2020 and prior. How does that fit into this equation? So Basically, what you're doing is you are putting all that inventory at a cost that you initially bought it at. And I know what you're going to say, a lot of you. I don't know what I bought it at. I would just say take a good guess. And we can put that graphic back on there.
Yep.
Take a reasonable guess. You don't have to write it down on a piece of paper. Don't go crazy. Don't say you paid $1 million for your 1999 Skybox Michael Jordan. Be reasonable. And you're going to add that to the purchases during the year. So you didn't have a beginning inventory because you started at the beginning of the year, but you're going to move all that inventory into that purchases during the year. And theoretically, I like to see when people have like an Excel sheet, for example, of their high dollar value of their inventory items. If you got a couple dollar cards here and there, I wouldn't worry about it too much. But again, you want to keep track basically what the value is of all your purchases, of all your inventory. And then whatever you still have at December 31st, you want to back out into your ending inventory. So your cost of goods sold, which is your true expense that you get to deduct from that 1099, is going to be, again, the purchases plus the beginning inventory minus the ending inventory. That number, that total, is what part of the formula is of what you get to deduct on your Schedule C.
Makes sense.
And again, that would also be in the Schedule D, but it's called basis. It's not called cost of goods sold.
Got it. And that's important because heading into the next year, you're going to have a starting inventory at that point, right? You're going to be able to use that to your advantage the following year.
Absolutely. Absolutely. I mean, if you think you're going to start a business, start taking good records as soon as possible. So, I mean, I had someone come up to me and said, we want you to help with our accounting, but I have no idea what my inventory is. As a CPA, it's not our job to create your inventory. It's your job to create your inventory. But that says, as your CPA, we are not the IRS. We're not here to audit you. We're here to defend you. So if it looks reasonable, we'll let it slide. If you're telling me, though, like that you're coming with 6-figure, 7-figure inventory, we may start to question a little. We don't want to be too greedy with the government. we want to push that envelope as hard as we can because we'd rather keep the money in our pockets than give it to the government.
I like it. I want a guy like Frank defending me. All right, so let's talk about a question that is confusing to a lot of people, and that is eBay sales tax. When you sell something on eBay, eBay is taking a tax out. At the end of the year, you see it on a performance report or on one of your dashboards. How does that fit into the equation of your own taxes?
Sales tax is a whole different animal, and I get this a lot. Not eBay, thank goodness, makes it very simple. So when the buyer, assuming you're the seller and I'm the buyer, and I buy something from you, eBay will collect the sales tax from me directly and remit it directly to the state that I live in. You, as a seller, have nothing to worry about. It's not going to be in your 1099. The question comes a lot is, guess what? I'm selling at shows. I'm selling out of my house. Should I be collecting sales tax? Now, the technical answer is, I'm going to use a word that IRS likes to use. It's called nexus. You're laughing. Maybe you've heard of it. But basically means is, listen, are you doing business with someone else in your home state? So if you live, let's say, I'll make up a state, Idaho, and you sell to somebody else in Idaho, theoretically, since you have nexus in Idaho, you live in Idaho, you should technically, I want to use the word technically, be collecting sales tax from sales just in your state, and every quarter remitting those taxes back to the government. Now, the government's getting sneaky with this. They're going to say, yeah, I may live in Idaho, but obviously I don't know of any card shows in Idaho. But there's a big card show in Chicago. So what Illinois said is, listen, we want our cut also. So if you do any business in our state in person, even if one day, whatever business you do in that day, technically you're supposed to collect the sales tax and remit it back to us. So if you're going to the National this year in New Jersey and you're setting up shop, again, New Jersey is one of those states, one day nexus. So theoretically, technically every sale at the National, you're supposed to be collecting sales tax and remitting it back to New Jersey. Now, if that's going to happen, I don't know. I'm not here to judge you. I'm not the IRS. I'm not the government. It all depends on how well you risk averse you are. Whatever makes you sleep at night, you go ahead and do.
Got it. Okay. Well, I'm going to assume that electronic transactions versus cash transactions will probably come into play a little bit here in that
Yes.
conversation.
Yes, we'll get to that in a minute.
We will get to that in a minute. Okay, so just to be clear, then the sales tax that eBay is collecting, this is something that is confusing to people because it's added on to the transaction. You sell that card for $100 that we mentioned earlier. There's a 7% sales tax added on. That wasn't your $7 or $7 taken out of your $100. That's an additional $7 that was paid.
Correct. And so
eBay.
the eBay as a seller is going to say, listen, you never saw that $7. eBay is going to act as an agent for the IRS. We are going to collect that $7 on behalf of the seller and on behalf of the buyer. And then on behalf of the seller, we're going to remit that directly to that specific specific state. Yep. So you have nothing to worry about. And it really is a nice feature of eBay.
It is.
For all the other things they do.
Exactly. Thumbs up for eBay, making it a lot more efficient for us in our sales tax. Okay. We just mentioned this a second ago. Seems like more dealers are going cash only. Is that a better route as a dealer?
It makes it tougher to trace. There's no question about that. I was watching a video that Mike did, and he said it was at the Texas show, and a lot say cash only. I think a lot of dealers, there's this, obviously we talked about the new rule this year that everything over $600 through any of these apps, you're going to get 1099 for. Yep. So I don't know why, but I think these dealers think, especially these ones that are really not businesses, let's say, they're just set up once or twice a year, and they think, okay, if I can avoid using a credit card, because a credit card now, $600 or more is going to trigger 1099, as well as Cash App, Venmo, eBay, you name it, any electronic payment where they collect over $600 on your behalf, you will get a 1099. So, but with cash, cash is king. Cash is tough to trace. So again, you probably can get better deals on cash. And I'll tell you right now, if I am a buyer and I see a sticker, and I'm sure you've talked about this before, A, there's no way I'm paying sticker price, but B, I'll tell you right now, I better get a discount for paying cash. Because believe me, they're saving money also. It's better for both of us. It's not just for them.
Well, you just walk up to that table and you say, Frank told me how much money you're saving, Mr.
You know what I do? I'll give you a quick tip. This again, I'll get off taxes real quick. I go, what's your best price? So they give me the best price. Once we get to the best price, and then I go, okay, what's the cash price? And I get a better price.
I like it. That's a great strategy. Typical Northeastern right there, although you're not from the Northeast. You're really from Michigan. So, okay, last question. I know folks are probably already getting tired of talking about taxes, but I promise this is meant to help you. Where do I report the 1099 I received? It seems so simple until you get it and you're like, uh-oh, what do I do? Where do you report this?
Let me keep in mind here. So people are probably going to get 1099s this year or next year. Now, the government has no way to trace the 1099 directly into your tax return. So in other words, if you got a 1099 for $1,000 and then you got, I don't know, a W-2 or something, or you got stock sales, for example, which is a different type. There's different types of 1099s. There's no way they can identify the different 1099s within the 1040. So going back to what we talked about earlier, you get a 1099, you're running a business, you're going to put that into your Schedule C. You get a 1099, you think it's a hobby, you're going to put it into your Schedule D. Another place you can do it is right on page 1, under other income line. Okay. I don't recommend that at all. You're going to get taxed on the actual top line of that 1099. That's the only place where I would say it's wrong, because you're not going to be able to take any deductions against that top line revenue number.
Got it. Okay. That makes sense. I mean, that's very clear. It's not that hard.
As a CPA, we have been ready for this. We talked about this, I know, Ty, you and I, over a year ago. Yeah. And I know it's the hot button topic right now with the 1099s. I really don't think anything is going to change. I know a lot of people this year that got 1099, so I should say in 2020, and they actually did better because it opened them up to the Schedule C, where they were very afraid of the Schedule C previously. It's not that they couldn't do it. They were just very afraid to venture off that page 1 of the 1040. So, I mean, I see a 1099. Sometimes I get excited because I know, okay, we can really hit this IRS 1040 hard and possibly make you some money that you didn't have the opportunity to previously.
I think that's great advice. And For all the overreaction, I think a great positive has been people are learning how to run a business and run their own finances better because they can now use the Schedule C
Yeah.
and D, which they could have used anyway.
I mean, it's making people more accountable. There's no question
Yeah.
about that. But is that really a bad thing? I mean, you really want to know how your business is running.
Yeah.
So
very, very true. Well, you are a hobby hero because of what you did the past year and a half of answering questions nonstop. I'm going to link your channel in the show notes. We'll put your email address in the show notes, but
I appreciate that. Thank you.
I also want you to get clients. What is your ideal client and how do you want folks to reach out to you? Because people are going to reach out to you and say, hey, Frank, your team just needs to handle my finances and my taxes.
Well, I appreciate that, Ty. I mean, let me start off by saying this, and I said this earlier. I would say in the last year, I've answered easily 1,000 emails. I don't have 1,000 subscribers to my channel. I've answered 1,000 emails. The only thing I ask is if you have a simple question or not so simple, complex question, go ahead, email me. I may ask you to subscribe to my channel. I think it's a fair price to pay. Now, if you want us to actually sit down and do a Zoom call with you, I do two types of things. I offer that service where we go and people have a list of questions, very detailed, very tailored to that individual. I'll be honest, we charge $200 an hour to do that. Now, I like to say that's an investment. It's definitely deductible if you're running a business. No question. If you want us to do a full tax return, it's generally with the Schedule C and a W-2, nothing too complex, including your state returns. It's $1,000. And people, I know, they gulp at that. $1,000, I can do QuickBooks for $100. But my response to that is, again, think of this as an investment. So I would say anyone out there that wants to save money because they got a 1099 and they want to use that to their advantage, you could seek out me. We have clients from literally all over the country, all over the world, thanks to Bench Clear Media. But again, if you don't want to go to me, I understand if you want someone local. But if you go to a CPA, make sure they really understand the hobby because there's a lot of unique things to the hobby. And I see we have like 1 minute left. I want to say something else for this year for people that are going on to file the Schedule C. In 2022 will be the last year you could take 100% of business meals. And I'm going to leave it up to the viewers to decide what a business meal is. But 100% of business meals are deductible. I'm not saying go to Ruth Chris and order a bottle of Cristal or anything like that. Be reasonable. Don't be greedy. As I've always said, never volunteer information. And the goal is to get that Schedule C to 0.
What I just heard is that in 2023, we're going to have a lot of people losing weight. And that is a
2023 is going to be an interesting year because that's really when the 1099s are going to hit people's desks from 2022. And a lot of deductions that they could take this year they're supposed to sunset's the word we use at the end of the year.
Got it. That makes sense. Well, I can speak from experience. Your team is exceptional. You handled my finances last year, my taxes, and we're top notch. And I cannot recommend.
I appreciate that. Thank you.
Thank
I
you
want to
so
say my
much.
partner's father. We used to work. My partner's father owns a hobby shop. He used to work for the IRS. He knows this, believe it or not, better than I do. So
crazy. Good stuff. Frank, have yourself an amazing night. Follow up with Frank. Subscribe to his channel. Email him with any questions. Have a great week. See ya.
Thank you again for having me.